Hello and welcome to today's webinar. My name is Jenny Winter. I'm going to be your moderator today, and we're going to be discussing real-time payments, global state of play, lessons learned, and how to make money. So I'm delighted to be joined by key real-time payments leaders to discuss the recipe for success for real-time in New Zealand. So please let me introduce them. So we'll start off with Steve Wiggins, Chief Executive of Payments New Zealand, who will give an overview of current activity and what the ambition is for real-time payments to ensure that New Zealand strives to be at the forefront of real-time. Then we have John Forrester, Tribe Lead, Payments Westpac New Zealand, who will discuss their real-time payment strategy, what their mission is for the future, and how they intend to drive payments innovation. Then, last but not least, we have George Evers, Senior Vice President, Product Real-Time Payments at Vocalink, and our very own Jeff Tunbridge, Solutions Director, Payments Networks, ACI Worldwide, who will both highlight the lessons learned from other real-time payment schemes globally, the practicalities of addressing interoperability to ensure New Zealand fully leverages cross-border to transact globally, and of course, the use cases to help with the commercialization of real-time. So, I'm going to start first of all with you, Steve. So, please can you give an overview of current activity and what's the vision of Payments New Zealand to ensure that they stay at the forefront of real-time and don't get left behind?
Sure, thank you. Probably start with the strategic program we kicked off a couple of years ago now called Payments Direction, and that's really where the conversation began. Within the Payments Direction program, one of the work streams was around speeding up the system, which we affectionately refer to as fast as. So the discussion was around how fast does a system need to be to meet a particular customer's need, use case, or sector. And that has certainly evolved over the last couple of years as the industry has talked about where to next and what we need to do. Recently, we updated our environmental scan, which took a sort of a global look at the payments landscape, and it certainly came through that real-time payments are now very much a hygiene factor, and the movement towards real-time payment capability is definitely accelerating and picking up momentum. So, yes, there is a bit of catch-up to go, but from our point of view, what we want is to ensure that Kiwis can pay who they want, when they want, and how they want, and of course, speed has a component of that. Okay,
and so what I want to move on to you now, John, at Westpac. So how do you see Westpac kind of playing its role in driving real-time payments in New Zealand as a kind of poster child, if you like?
I don't know about poster child, Jenny, but we're working hard to put the various building blocks in place. And look, I completely agree with Steve. I think this is about us working actively with Payments New Zealand and proactively with Payments New Zealand to agree what those industry milestones should look like and make sure they're credible. But I endorse the view it's becoming increasingly evident that real-time payments and particularly global interoperability are becoming table stakes for all of us.
Okay, and fine. So we're actually, I'm just waiting for George from Vocalink to dial in. He's having a few issues. So what I'd like to do is actually move on to you, Jeff, and then we'll come back to George when he's lucky to dial in. So how does sort of, what's ACI's global experience and which countries are we seeing where we really are seeing real-time success? So looking at lessons learned really, Jeff, and your kind of knowledge on the ground.
Thank you, Zenia. I think what ACI has seen around the world is that there is good adoption of real-time payments, particularly between participants. But as we compare the different markets, whether the UK, the US, Australia, or even into India, standards on their own aren't driving results. And even with the adoption or a number of use cases driving the actual investment profile, the real success where things take off is when the banks and the customer base, the corporates and consumers, actually have access to overlay services or capabilities that change the way they experience payments. In India particularly, the whole of the Universal Payments Interface has grown by using overlay services to roll out, and it's had significant adoption. They had immediate payments from...
Here, Jeff. Are there any particular, I mean, is this slide that I've got on the screen just now for India helpful, or would you rather freeform it?
No, I think this is a really helpful one. India had immediate payments for a number of years, but given the nature of the market, it was something where it didn't take off. It was only as UPI was rolled out and overlay services around bill payments, person-to-person payments, rather than just within the bank app, but actually across payment service providers and other participants, that they've seen the growth, and they are now up to 1 billion payments a month. And that's the significant growth. Coming back to the core question, what are we seeing? It is thinking about your customers and how they use payments and how can they benefit from real-time payments, not just putting in real-time payments for the sake of it.
Sure, and Jeff, if you were to give the sort of best example of a sort of a smooth transition towards real time, where a country really had it very well organized, they knew what they wanted to do, they gave education to the various banks and FIs involved. Which country would that be in terms of the sort of the best practice? I was at a P27 event last week, obviously to do with the Nordics, and they were saying that it was all to do with actually MPP in Australia. But is there any payment scheme that we should be trying to emulate in terms of speed to market and getting things moving?
I think it is presumptuous to think that any one market has the right answer. We exist in a world where you either want to migrate existing transaction flows onto a real-time system, and that is fundamentally what is happening with MPP. In the market in Australia, people don't realise they're using MPP. So you can't say real-time payments itself has been a success. The new rails are a success. Or you have a market like India where there is clear branding, or even Malaysia with Duit, where there's clear branding around what is a different payment type, and that creates success. New Zealand will have to define what is the right model given the existing ecosystems, the culture, and the adoption framework they want to experience. There are clear case studies, but the blend will be unique to New Zealand, as every other country has been.
Okay,
Can I add as well, Virginia?
Yeah, carry on.
I think Jeff's point there was really salient, and I think looking to Australia as an example for New Zealand, the underlying rails, the infrastructure should be invisible to the customers. The fact that they're using that new infrastructure really should be largely invisible to them. And I think it's our responsibility across the banks and with Payments New Zealand to ensure that that's one of the outcomes that we achieve. Yeah,
agreed. It's up to the banks and the FIs to sort of shield their customer from that. It's your responsibility. But I think that brings us smoothly on to John. I want to talk about Westpac as a kind of case study here. So one of the challenges banks and financial institutions face is, of course, how they can overcome the dependency they have on legacy infrastructure. So how Westpac modernizing their architecture to compete in an increasingly new age of emerging technology, geared towards digitally led, instant, everywhere economy. So in a short way, what are you guys doing in terms of payments modernization to improve, your customer, your customer journey, but also making sure that you guys are the sort of innovators going forward?
I think lack of scale in New Zealand is probably one of our key challenges, and that's the same here at Westpac New Zealand. If we were to try and consume this entire challenge in one gulp, we would struggle to figure out a business case which supported that. So, very simply, we need to take kind of a medium-term view, and it has to be an incremental approach. We probably, at a national level, we probably need to be a little bit more imaginative and innovative in approaching this, a little bit more pragmatic as well, potentially, than some of the other larger jurisdictions around the world. So as I say, we take an incremental approach to replacing some of those core platforms. We're well on that trajectory now. I'm really pleased what we've been able to achieve, particularly in the last 12 or 18 months or so, but we've still got a long way to go. The other caveat I'd put on it, Xenia, is, at the same time we need to, and this is particularly salient for us in this part of the world over the last week or two, make sure that our fraud detection and our financial crime tools are fit for purpose, robust, and always working the way we expect.
Yeah, and I think I want to come back to you, Jeff. So one of the main points of this question, and I know you've done a similar presentation at Cybos and things, but, real time, a lot of banks and FIs, there's a sort of a snort when we talk about, how you can make money out of real time. It's really an expectation from the customer about what they demand, quite frankly. But if we are to look into, ways where we can maximize on real time, and we look at aspects such as, soft revenue, for instance. So if in the crudest terms, we take soft revenues in terms of looking at, best practice within the bank in terms of improving functionality, adhering to SLA. And then obviously you've also got this idea, and I think it's particularly important for New Zealand, where we look at this idea of faster payments, faster fraud. What kind of examples can we come up with when we look at the benefits for soft revenue? And I'm going to get you to answer that, please, Jeff, and maybe a reference to UK faster payments, if possible.
Well, I think the first thing is that the nature of most of the real-time payment systems around the world is the use of ISO 20022. And I'm sure later on we'll come on to the benefits of that from interoperability. Mm-hmm. But from the point of view of soft revenue and benefits, it suddenly improves dramatically your ability to manage fraud, look at the compliance checks, AML, CTF that you need to do. It allows you to realistically, over time, reduce your risks within the payments flows because you have more information coming through or going with the transaction in the first place. So your systemic risk, your capital adequacy that you have to use to underwrite your payment systems goes down because you have less exposure. We are in a position with the adoption of these standards where we are going to get to a point of having known payers, known payees. So the ability for any bank to look at how quickly they make funds available or potentially trigger any lines of credit or events, transactional banking or cash flow financing events based on these payments dramatically improves, creating a much better position. The other side is the capabilities of the systems as well allow you to remove often direct debit risks because you can move to request for payment. And so the lines of credit that you have to assign to corporate customers particularly aren't being wasted on low value payments, but rather can be used for capital investments within your customers to drive increased revenue.
Yeah, and I think that's right. I mean, we're going to come on to the hard revenue, which is going to cover, requests for pay and digital overlays. But is there anything, from a Westpac point of view, John, how have you seen real time kind of improving the efficiencies within your bank?
I think we sort of see that, Xenia. I think we're still at a national level sort of move to that level. So I would suggest that that's probably something we'll begin to see incrementally as we begin to get those building blocks in place and we're pulling the trigger on them. I agree with the points Jeff made. There's plenty of soft revenue opportunities to be gained here, not least of which, particularly, as I said before, this is table stakes, or increasingly becoming table stakes. So if you're not part of the story, banks are going to find that they're cut from consideration of particularly some of these larger customers. So, elements of this are we simply have to do it to make sure we're in the game.
Yeah, and we've seen from actually various surveys that are out there, whether it's Finextra or whether it's local news, that these SME customers, these corporates, will switch if they're not offered real time. I haven't got a specific figure for New Zealand, but I can remember when I was in Italy being flabbergasted by it being sort of 96% of SMEs said that they would shift. So you're right, it is table stakes. It's something that's required. So I think we'll get on to the juicy part then. Jeff, take it away in terms of when we're talking about the hard revenue, and this is where you've touched on requests of pay and overlay services before, but really, are they as sexy as they sound? What do they offer these banks and FIs in New Zealand, and where can we look to in terms of seeing where it's worked well? I mean, India, for instance, but over to you, Jeff.
Thank you. I always love it when payments are called sexy. I think the opportunity is to actually start driving new experiences for your customers. For most of us, the biggest constraint we've ever found as we've come into payments is the lack of information allowing us to create transactional banking or cash management experiences. We can't drive events, or even where we have created events around payments, whether it's the sending of a payment or the receipt. There's been a lot of assumptions or pre-configuration required. We are now in a point where, with the data and the real-time experience, banks and countries have been able to create services or experiences for their customer that leverage the transaction itself. So request for payment is the one that's being driven in many countries. This is around, rather than someone needing to sign up for a direct debit, a supplier can send a message, potentially using the addressing or alias service that's within a real-time payment system, to the payer and say, this is what you need to pay me, these are my details, and this is what the payment's for, and this is when the payment's due. The payer then just has to say, yes, I approve. It takes away the barrier of them entering the details. Potentially the beneficiary's bank details can be hidden behind an alias as well, and the payment comes through, and because it's got the information that the beneficiary put in, it's instantly reconcilable. And so whether that's replacing direct debits or just creating a better payment experience, using push rails or credit rails, we've created a better service for customers. But it doesn't just stop there. You're then in an environment where you have validation capabilities that you can offer to your customers, so they actually can confirm who they're paying. They get a response back with a short name or company name. You can start driving events off the payments around financing because they've classified particular payments or particular values, potentially into installment services or inventory finance. It becomes almost a transactional banker's dream of actually finally being able to do the things they've always wanted to do, but never necessarily had all the information they required to do it. We're seeing this particularly in India as being the big use case where the UPI payments are happening almost independent of the rest of the payment ecosystem. And they're going to have to look at how they merge the systems together in the future, and that will be a challenge for them. If we now look at the UK, ramp-up of faster payments was steady, but now overlay services are beginning to kick in. It is accelerating again. Actually, the irony of the model is if...
Do you need me to show that slide?
It's okay. We can share that with the audience later. The irony is probably in America, where they actually started with a pure overlay model of person-to-person payments, which led to initial growth, but they're now in a situation where everyone's competing rather than working together, and they're suffering fragmentation. So I would say, coming back to it, the revenue that banks can make to justify this investment, and real-time payments is a significant investment, comes around actually simplifying the payments and receipts processes and experience compared to what we've traditionally been able to do with payment systems that were designed when computing and telecommunications was constrained. We don't have those constraints now, so we can be more creative and innovative.
Absolutely. I'm sorry, I'm just trying to see. I've got George Evers desperately trying to dial in for Vocalink because he's got lots to bring to the table in terms of the Vocalink's experience. And I particularly want to talk to him about the sort of data insight side. While he's dialing in, let's look at it. So let's go back to this slide in terms of what we're examining in terms of the three different ways to make money. So again, very simplistically, the data insight is going to be being able to leverage or fully maximize that data, not only to provide a better customer service, but also get insight from a bank's point of view into customers, or as well as being able to use that data to try and it's going to lead on to the next question, which is going to be how New Zealand can be truly interoperable, how we can really get part of that cross-border payments. But I'm going to, in George's absence, I'm just going to pass it over to you, John, and talk about the importance of data, but then leading it in to where we as people involved in payments in New Zealand want to see us in terms of global trade and leveraging platforms to make sure that we are, truly making the most of real-time payments and pushing that forward. So first of all, John, talking about sort of, data, the impact of data, and you've kind of covered it, Jeff, when you've talked about ISO 20022. But is data, John, important as part of this global ambition to be truly interoperable for real-time payments? So over to you, John, from a Westpac point of view.
Well, I think it's absolutely essential. I mean, you could argue that the transfer of value is almost secondary to the ability to be able to share information and do that much more efficiently on a global scale than we've ever been able to do in the past. So Jeff's point in that regard is well made. I'm a bit anxious about his references to sexiness and transactional banking dreaming, but we'll set that aside for the moment. I think that from the bank side, we're probably still figuring out how to tell a story on the data insights side, Xenia, and build a commercial story around that. I think there's been a lot of noise around the value of our data assets over time, but as it relates to real-time payments, yeah, as I said before, I think it's absolutely essential to the whole story. I think the other point to make, and one of the opportunities we see in this sharply enhanced data environment, as I said before, the ability to use that data to bring a lot more rigor and risk management into particularly fraud and financial crime just building speed without the quality it creates a huge amount of, or a heightened risk story. So I think we've got to make sure we keep that very balanced. To your second point around interoperability, look, New Zealand is still predominantly an export economy. Being able to be connected to and plug into the rest of the world is essential to our economic future. So that international interoperability is probably our predominant challenge. Steve might want to wade in here, but there possibly is a view that we might be falling a little bit behind on that, so I think we've still got a lot more work to do there. I'm less concerned about the domestic side of it, but the international is certainly concerning.
Yeah, the international one is really, and certainly a lot of growing pressure. Very strong message that came through, certainly with CYBOS this year when regions were discussing, their GPI solution, and those sending from a real-time jurisdiction talked about that end-to-end customer experience impact of sending into a batch jurisdiction. So I think there will be that experiential pressure coming on, but also some trade-related pressure in terms of part of the trade deal to introduce an end-to-end real-time solution to get the velocity of money moving from one jurisdiction to another. So probably the core message, the pressure is mounting.
And so, and Jeff, how do we make it happen? With your sort of, solution director hat on, what do we need to do from a technical point of view to make it happen? I mean, we're all aware of roadmaps. There's loads of bits and pieces we need to do, but how does one action it? And what's the sort of top priority? Again, using your kind of global, experience in terms of timings and what the actual practicalities are.
So I've been privileged to be part of the working groups that Payment New Zealand have established, and I want to congratulate Steve and the team at Payments New Zealand for the inclusiveness with the market. That has to be the starting point. It is a change, and everyone needs to understand what's coming and why. I think the second thing, as I look at it, it is understanding the level of technical change you want. People might be a bit dismissive about what the UK did, but they achieved real-time payments basically on the back of card rails or card standards. But it allowed everyone to adopt real-time payments and to understand the impact within their individual bank, within their individual participant. And that is a challenge. Success only comes with ubiquity and reach. If we look at some of the challenges that have happened even within MPP, and they're still dealing with them now, where there are accounts that can't be reached, that creates complexity if it hasn't been thought of beforehand from the point of view of customer experience and systems within the bank. So then as we look at from a technology perspective, the standards are there. ISO 20022, you should always question whether a standard is something you should deploy. But my personal opinion is if I look at everything that's happening around the world with Swift GPI, with the Nexo standards, which is ISO 20022 for cards and ATMs, you have to have a very good reason if you don't use that as a foundation. It is then purely a deployment question of whether you are making your real-time payments a new clearing stream or experience with its own brand, where you drive adoption because people want the capabilities and functionality, or if it's a migration journey where you see the new set of rails and the comprehensive nature of the standard allowing you to migrate existing payment methods onto those rails alongside the real-time payments. And that is an industry question for New Zealand, where I'm more than happy to talk about pros and cons, benefits and risks, but Payments New Zealand, the regulator and the participant banks will need to decide what is the go-to-market story they want. The technology, I think, now is at a point where it's fairly well proven and fairly well understood. It is, what is the journey you want to take? Are you going to take a train, or are you getting on a coach? And there are pros and cons to either side, and the market and the participants must decide what they want to enjoy.
Yeah, and I'm actually going to, and that's good feedback. I think we've got George now on the line here. George, so do you want to step in when you're talking about interoperability from a Vocalink point of view?
Yes, can you hear me okay?
I can hear you. Thank goodness. My apologies, George, but we now have you on the call. So fire away, sir.
That's all right. And luckily, I've been able to hear most of what's been going on the call anyway. Just a recap. So I think in terms of the specific question around interoperability, so I think the opportunity around interoperability is where there is discipline around the adoption of the standards for the payments, so ISO 20022. And there's quite a lot of work. We certainly work with SWIFT and the Clearinghouse, and also organisations like NETS as well, to try and align around those standards. So I think there's been some quite good effort up front, which should allow interoperability around the core payment messages. We've talked a lot, though, about the other data, and the other data, and not just the additional data you can send with the payment, but where I see most interesting use cases, and specifically in markets like the US and in Thailand, is on the other payment messages, which is not just additional data, but it's thinking about the opportunity that arrives from what I call payment modernization, i.e., we're going to be building a new payment system. That's not something we do too often, because it's quite a lot of work and it's quite a lot of effort for banks and market participants. But therefore, we should take the opportunity to really modernize and upgrade that payment infrastructure. If I think about the payment systems that we build, they're highly secure, highly resilient. They're run and their access is secured, often via a bank, via mobile banking or internet banking, and therefore they're highly trusted networks, and they're quite a rare thing. The opportunity that we're seeing, I think, has been most prevalent for banks, and actually that will start to drive new opportunities for them and new value for their customers, is extending the use of the messages beyond just moving something fast to moving other messages associated, before, during, and after the payment. So request for payment, I think it's a very good example of how request for payment can be used to organise the first payment to a supplier earlier on in the call. But request for payment, something really mundane like request for information about a payment, actually that's an area of high fraud risk for customers, for corporate customers, and also consumers. Is receiving information about a payment that someone wants, or receiving information about changing a payment, etc. That's an area where fraudsters try and attack corporates and businesses. So being able to transport those payments across that highly secure, highly resilient network is an opportunity for banks and their customers to reduce risk and increase efficiency as well. So I think it's not just the standards that allow interoperability. I think it's thinking more broadly about the messages you can put in place. I think someone also made the point around existing payment systems generally been designed around the constraints of our telecoms network. So when the first payment systems were built, you really had to think, what's the minimum amount of data I can transport across this dial-up line to be able to qualify whether this payment can be made, especially for cards, etc. We now live in an age where you can download an HD film in a few seconds. So therefore, those constraints don't exist anymore. So don't design a payment system around those constraints, because there's a lot more you can do across the network. So I think the opportunity is far broader when we start to think about modernization and all the other things that have changed, apart from just the fact that the money's going to move faster.
You're good, and you've covered a lot there, Jeff. So thank you very much, and thanks for the references back when we were talking about that. So I'm going to come on to a question actually that I want to ask, and I know Jeff's keen to pose to you, Steve. So what best practice can we take to avoid fragmentation and ensure efficient deployment of real-time in New Zealand? So I'm going to take that just straight over to you, Steve. So fire away with that.
Yeah, sure. Look, it's really important that we do move in the same direction and sort of as a consolidated market with a clear time frame in terms of that story once we get to that point. But in terms of a reality check, in terms of the New Zealand industry, there's real capacity constraint there. So in terms of both the individuals and the organisations are going through a huge amount of regulatory related work. So there is pressure and constraint on the actual industry per se. So prioritisation is absolutely key. And doing that in conjunction with some of the other building blocks, such as the standardised APIs, the moving to 7 days a week settling, all being done and managed by the same group of individuals and organisations. So for me, it's getting the priorities right and making sure that we are realistic with those priorities and that we manage the capacity that we have. So there's one of the questions that have come through regarding, are the industry players ready to commit to infrastructure? Certainly the conversation has been, yes, we know that this is a hygiene factor. We know that we have to deliver that real-time experience to Kiwis. Hasn't got to the point of the how and by when.
And John, from a Westpac point of view, is there anything you want to add there from a bank perspective?
Yeah, I'd agree with Steve. This is a prioritisation story, and as I said earlier on, scale here means we have to be a little bit more imaginative on how we deal with some of these challenges. What we can do concurrently with the API work and the open banking work in New Zealand is important. If we can kill two proverbial birds with one stone as we work through that sort of thing, that'll be really important to us. As I say, the customers' expectations are getting a little bit ahead of where we are, but that quality versus velocity question is one we need to work through really well. I think, look, at the end of the day, customers' expectations are for, as George said before, ubiquity and simplicity, and our responsibility is to try and insulate customers from that as best we can. So work with Payments New Zealand, figure out what those credible milestones are, and figure out how we deal with the prioritisation challenge.
Yeah, and I understand that, and that makes sense. But from a sort of, from a sort of ACI Vocalink perspective, where we're actually talking about how we roll it out, the practicalities of it, is there anything, George, that you want, that you want to sort of talk to these guys about in terms of getting ready for that roadmap? There's a lot of bits and pieces that banks need to prepare for already, and so they can't afford to be sitting on their laurels too much. So I'll pass that over to you, George, and then I'll go over to you, Jeff, in a second. So what do you want to talk about in terms of timelines there?
Yeah, so I think that, the experience that we have, so, we're involved in projects around the world in terms of modernisation. And I think what's starting to emerge are the characteristics of ones that I think are really going to work. So the guidance is, as I said earlier, it is a once-in-a-generation opportunity. It's not a time to think about what is the minimum we can do, because in that respect, for the UK, we just went faster. So someone referenced, we leveraged the card system, so we just went faster. We used the 8583 standards. We're now starting the process of rebuilding that system. The Pay UK have started the process for new payments architecture as well. That, in contrast to the approach that the US have taken, and to a degree Thailand, where they're actually looking beyond just going faster into that broader message set. What I would say is that if the incremental efforts to embed those additional messages, to think about those additional flows, to think about how they can help your customers collect and move money more safely and securely, it is not huge for the banks, but it will build foundations for a lot of other products and services. So it will improve the ability for them to offer products to their corporates to help them collect money, alongside things like direct debit, so request to pay, with a credit transfer on the back, that's an example. It will increase the amount of information and insight that the banks have around their customers' payment behaviours. So I think, my background, I spent 13 years in transaction banking, and I'd always, the bank always considered ourselves to be quite, data rich and have lots of information. I've reflected on that recently, and I think one of the things I've identified is, a bank account is a record of something that has happened. A payment left, a payment arrived. The payment systems that transport, what I call those, before, during, and after messages, actually generates a lot of information that the banks don't currently see, which is, those businesses that are growing will be generating lots of requests for payment. Today, they might take the form of an invoice, which the bank may or may not have visibility of, or, but more likely they won't have visibility of. The banks will start to have visibility of that. And that in turn, helps them, because they can securely transport those for their customers, but also the information that sits within those will give them indications as to customers that are growing. Therefore, do we have a financing opportunity? Would also give you an indication as to businesses who may be receiving lots of requests for payment, but not generating very many. You might see a business that's starting to struggle with its burden of debts as well. So that, that bit additional effort to transport more information before, during, and after the payment can drive huge benefits out to your customers, but equally can generate new product activities for customers. So therefore, I think thinking about it more broadly than just it's got to go faster and our systems have got to be available more often, to we need to be able to transport richer data across this system. I think that's a key consideration for the banks. But they should think about that as an opportunity rather than extra work.
Yeah, and anything to add on that, Jeff?
No, I think it is about taking a view of this as being generational change. The questions from our audience, the attendees that bring up some of this area, there has to be a balance around investment, but this has to be seen as where there are efficiency and revenue gains possible. To some extent, what is the next generation of payments experience that actually has to be adopted by any country, because, the card rails have been around doing whatever they're doing for a number of years. You've got the BACO format with SBI, equivalent to ACH in other countries, giving certain experiences. There is a point, but there has to be justifying all of it. The productivity and experience benefits, revenue benefits that allow the investment to be justified, because most of the participants are commercial businesses, and even with a regulatory push, people still need to justify the investment within their own environment. So just even saying it's a regulatory requirement, still there is the question of, okay, but how can we make money from it, or why are we doing it? So I think it's some of it's an attitude, some of it is around taking a step back and just saying, what are we enabling? I think New Zealand's actually in an incredibly lucky position where we are seeing real-time payment systems around the world moving to their second or third generation. And you can take the learnings from all of those to deploy the right model for New Zealand with the best practices. It also means, and as George has mentioned, and I entirely agree, this isn't just about real-time. This is about saying we are moving to a modern, standardized payment ecosystem where we can drive a more productive experience for all participants, whether banks, whether government, whether insurance companies, whether consumers, because we have an enriched environment. The real time is only one aspect, and that is about a delivery of a payment. And not all payments have to be real time, but actually you have the ability to deploy a superset experience and simplify your ecosystem. It's incredibly exciting, I think, what New Zealand can achieve, because
you have to be pragmatic given your size, but you have, 40-odd countries now that have got different types of systems, decades of experience with RTGS systems that you can actually apply to get a world-leading outcome.
Yeah, and I think it's also important. I mean, one of the great things about New Zealand is how collaborative you guys are. So I'm going to pass this over to Steve, actually. I mean, you're the man with the ear to the ground. So having listened to what sort of Jeff and George have said, is this reflective of what you're hearing when you're out talking to banks and FIs in New Zealand, Steve?
Yes, to a point. I mean, everyone's pretty up with what's been happening around globally, and then just looking at how that should be reflected in a New Zealand context and within their own organisation as well. And so there's always a tension around how we get those priorities, and I think it still goes back to we are in a really good position to get this right as long as we do move in the same direction and reach industry consensus as to what's going to really make a shift for the New Zealand system and for Kiwis as well.
There is one thing I'd like to add, Xenia, is because we talked a little bit a couple of times on overlays, and that is one area where, as my experience is starting to say, beware of the overlays, is because the prevailing sort of model seemed to be that we build a very lightweight core, just the credit transfer as part of the core system, and overlays will miraculously appear around that core. To date, I haven't seen much evidence of that being successful. And in the US, and as I mentioned again in Thailand, they've integrated a lot more messages that might be proposed as emerging as overlays. So request for payment, for example, is positioned now, I think, in Europe and SEPA as, is this an overlay service? In the UK, there's a model that says that the request to pay may be an overlay, etc. I think the same in Australia. The challenge, I think, for the market and thinking that the overlays will appear afterwards is that for each overlay, for each new message, you have to build another network. Whereas when you modernize the core payments infrastructure, if you integrate those messages into that network, then you have the functionality available to all participants. If you have open access to that payment network, then you have a network upon which organizations can innovate. And, if I talked a few times about, rich data. All that data today, the rich data exists within your corporate customer's accounting platform, whether it's Xero or SAP, etc. And at the moment, with our payment systems, we ask them to strip all of that off and then just send the minimum through to move the money, and then expect people to try and reconstitute that into a reconciled payment. And so, my opinion and my kind of guidance on this is, if you haven't done it yet, then think about all the messages that you can put in that core infrastructure within that switch, because that actually will be, that network is what's most powerful. The concept of a separate overlay market emerging on top of the real-time rails, I'm yet to see it work. In fact, I see, you guys are closer to the Australian market, but my sense in Australia is actually they're now starting to move away from that model.
And so is it as simple, George, as, looking towards a more sort of strategic approach as a whole? You talked about payments modernization and, and I think that sort of reflects it well. But are you talking about the fact that banks are just doing a sort of tactical, are taking a tactical viewpoint at the moment where they're kind of ticking the box? They know the customers are after it. It's table stakes, as we've previously mentioned, rather than actually having this sort of preparing properly for being able to really deliver these overlays and all the kind of added services that are going to be expected over the next couple of months, or is that again too simplistic, George?
Yeah, I mean, I think there's a couple of things. I think technology change in banks is never tactical. It's always a big investment and a big change to make. So I talked earlier about taking the opportunity to get as much value out of that rather than just be compliant. It's upgrading your payments infrastructure is not tactical. It's a major investment. The incremental investment you make to have a lot more functionality in that central infrastructure is not enormous, but the benefits will be more easily realizable than if you expect overlays to come along and happen afterwards. Really, the guidance is, the examples we have. I'll talk a little bit about Thailand. So in Thailand, what was implemented was real-time rails with a real-time credit transfer, but also request to pay, and a very functionally rich proxy service or directory or alias, there are different terms for it. So rather than thinking about that alias service as primarily to drive P2P, so just your mobile phone number, you have your mobile phone number, your email address, a government ID as they have it there, and that combined with a combination of just three elements, a proxy service, a real-time payment, and a request to pay, built a system that allows government to electronically distribute all their benefits payments. That's because of people being asked to attach their government ID to a bank account. The government was able to identify that it had been paying, I think the number was something like 250,000 dead people because, the accounts had been, the banks had been told that the individual receiving the payment had died. So that was a benefit to them as well, if not a little macabre. But equally, the request to pay element of that allows the government now, it can reach the funding source. It hasn't got control over the funding source, but it can reach the funding source of its citizens and a request to pay. So whether that's a tax bill or another item that the government's trying to collect, they can use the same system to generate those messages as well and make it quick and easy for people to be able to not only get paid in terms of benefits, but also to make payments to the government as well. So, and really that was just that one extra element. If you'd just had a credit transfer and a proxy service for people to be able to push payments, then those other use cases in terms of receivables management, and you built a separate request to pay network, it wouldn't be connected to that proxy service. It wouldn't be connected to that credit transfer service. It would have to be a network that built on its own. And it wouldn't, nor would it have the reach that payment systems have in terms of access to the banks and market participants, where the funding sources or most of the funding sources for the country exist.
Yeah.
I think I'd like to add to if I think what George is describing to me though is now that is the table stakes, that is the expectation for any real-time system. You have to have a comprehensive addressing and proxy service. And you've got to think of how the network is going to be used. One of the questions from the audience is, is it naive to think there is one standard to rule them all? I think one thing we must be careful of as we look at this is we have to remember the ISO 20022 standard is not a payment standard. It's a commerce standard. It starts at purchase order, goes through to reconciliation. And so the standard itself probably covers all the use cases and scenarios that we can think of with respect to data, fields, messaging, for business and for any type of commercial or financial interaction. And so it is deploying an environment that can support all of the messages, or at least all of the fields, and then the messages have their different situation at different times. And then being able to leverage the infrastructure that you enable, whether physical, virtual, to support the different experiences that you want to offer the participants, your consumers, your citizens in New Zealand. We shouldn't be scared of it. It should be seen as something where you're going to change the productivity of the country through electronic and digitization. And that is the opportunity to the banks.
Yeah. And so there's a question that's come from the participants, and I'm going to pass this over to Steve and John, actually. So should the emphasis be on the data rather than trying to get this 24/7, functionality, and trying to upgrade those legacy systems. You talked about prioritization. And so what do you think, Steve? Should the prioritization be on making it efficient, making it effective, leveraging that data against this whole idea of 24/7, and also moving to those margins of actually speed, so 0 to 15 seconds for a transaction against, 30 minutes that you guys have got in New Zealand at the moment? So, over to you, Steve, and then I want to get to you, John, on that before we finish.
Yeah, no, really interesting challenge, because certainly where we're going, it's, we look at how do we balance those competitive markets working alongside collaborative infrastructure activities. So I think if we look internationally with the deployment of real-time and also moving to 7 days, most of them have done all of the above. The thing is, our actual existing system's pretty good. So it then becomes quite marginal in terms of some of those economic benefits. So again, comes down to prioritisation, and again, comes down to where the industry sees that priority to be.
Yeah. Anything else to add to that, John?
I agree with Steve. I think that I'd be anxious if we separated data from the transfer of value. In my head, that I think we need to keep those together. I think the challenge for us is how do we figure out the sequencing of putting these building blocks in place without losing any of the optionality and the choice that creates for us down the track. And the points that George and Jeff made are entirely salient to that. That yes, there will be opportunity to add value as we go forward. We need to figure out the logical sequencing in a way that capacity and our scale allows us to do credibly without cutting off any options.
Yeah, and just one thing for me to add on the, I think the question around 24/7. I mean, it's just ask the question is, which digital service do you have today that closes at certain points in the night? I mean, I think 24/7 is just for digital services, for a connected world, for people with smartphones, the way people operate. We saw those changes. We put faster payments in the UK before the first iPhone was launched, but actually it's been an infrastructure that has really accommodated the use of smartphones, etc. So it's still growing. It's still the fastest growing payment system we have. It grew at 14-15% last year, so it's still fastest growing of all the payment systems. The use cases are extending, and we're still looking to upgrade it as well. So I think there's another factor there's an upside to financial services organisations. If you get to the point where you're running your systems 24/7, then actually that's a much more efficient operation, because you're not waiting for batches that maybe haven't run, or building up challenges. You're moving to real time in terms of the way you manage your accounting platforms and balances and credit balances, etc. And that's also a more efficient way to move data around the bank as well, which has historically been, for obvious reasons, been heavily batch orientated. There aren't that many organisations around that they've been around for often in hundreds of years, like banks have. So therefore, they have evolved over time. They haven't leapt straight to the digital age, but actually these payment modernisation programs are an opportunity for them to move a lot of systems to real time.
Yeah, so there's a lot.
I think, George,
yeah, sorry, Jeff. Do you want to sum it up before we conclude?
No, that was actually John. Please, John.
Oh, sorry.
Yeah, I was just going to add. I think it's unlikely to be as binary as stopping batch. I think we'll have that for a period of time. That'll wind down. I think ultimately customer demand will tell us which way they want to go. We'll need to be able to tell them a valid story around why they should give effect to change. We've got to have the building blocks in place to support that. But I think we're going to have a period where one winds down and the other winds up. But I wouldn't dispute at all that our aspiration, our goal should be over time to get to real time across the board.
Yeah. Well, this has been a fantastic conversation, and we could carry on for another hour or so. So what I want to reassure you guys who've submitted questions is we will get to those. So I'm going to send these out to the gentleman to respond, and I'll get it through. This webinar's obviously been recorded, so I'm going to send out this to you probably tomorrow morning so you can watch it again or listen to it again and circulate it to your colleagues who haven't been able to join. But I just wanted to say thank you very much to our panelists. It's been a really interesting call, and I'm very excited about what's going to happen in New Zealand, and I appreciate everybody's time on the call. So with that, I wish you good night from the UK, and have a great day, everybody else in New Zealand, and watch out for that recording coming through. Thank you very much, everybody. Thank you. Take care. Bye-bye.